What's up, Jess? I'm back. Today I'm gonna quickly break down what's the next steps for the B3 besides the investing model. So for those who don't know, that probably is 99.99% of the two people that will view this. So the investing model is like long-term passive income. It's something that you can rely 100% automatic because it's a stress test that under the worst economic scenarios that we have available or that we have data so we can test them, just like the 2006 crisis, 2011 debt crisis, the 2013 gold meltdown. It could be also 2020 COVID. Well, it will be, of course, 2020 COVID. And I mean, it can be also 2021 to 22 range. Or for now, 2024 and the current price action of 2025 also acts as a very solid stress test range, we could say, because of the nature of price going up very aggressively all the year with little retracements. So that, of course, speaking for the asset that I trade, that is Xauusd, but a lot of pairs have USD or the liquidity is not even comparable. So if you're able to master Xauusd or understand how it moves, you will probably be able to trade more efficiently, for example, Euro USD or GBP USD, because the liquidity is it's lower than the Xauusd market. So expect more volatile moves in Xauusd, where also you can get big trends with Euro USD or GBP USD, for example, with little retracement. So that's not very suitable for EAs like mine that tend to counter trade waiting the retracement. But the reality is that per data, at least if Xauusd is delivering every possible retracement, you will get it in FX pairs. So don't worry about that. It's just a matter of testing and adjusting to every range. So in this case, the investing model is long-term, passive income, and the best part is the compounding. So we could say we combine the best part of trading and investing in one model where you can rely at least 80-90% of the times, because if COVID doesn't happen again, we're discarding one of the worst case scenarios our model has. So the Taylor model is you decide, for example, from the worst case scenario, your 100,000 deposit will have 90% risk. So I can adjust that 90% to at least to be 20%, 10% of the total deposit based in 100K or 25K, whatever. So you know what risk is the one that you are assigning to the EA. What I mean by risk, if price don't stop going up or down, EA will manage the margin efficiently based in the risk that we're assigning. So pretty much risk is how much margin the EA will use in every trade. So the lower the risk, also the lower the profit, and vice versa. But of course, as mentioned, this model will boost long term with compounding because of the great amount of trades that we open. Not only the nature of being hedged, but the amount of logics that scalp ranges. Just by rebates, you will be able to compound very fast, because as soon as you change the lots of your initial risk, then you're at least closing double of your original profit. So that's something very sweet, because also profits or deposit load can be compounded because I control the risk again. So if you want to keep the profits and deposit load as equity protection, is possible, or you can withdraw. But also we can, or I can adjust the risk. So it's always, for example, 50% based in the deposit that you have. So you're always in the threshold or the limit of your risk, but at the same time, your profit potential is increasing, not your risk, only your profit potential, because you have more money. And in this case, it can be profit or deposit load or rebates, or if you are using also affiliate programs, they can pay you also affiliate commissions. So that's pretty much the nature of my peak model. It's processed with data from 2004 to 2025 or year to date. I need to keep it updated to the most recent ranges. This case will be January and February of 2025, the ones that I'm adding to the investing model. But for trading, the situation is very different, because There I'm more aggressive. As you can see, this is just 20 days of 2024, September 1st to the 20th, and I'm trying to build the basis of my trading set files. I have tons of strategies I use over time. Also depends the market conditions, the news of the day, but I'm always trying to improve my set files and my results, especially the risk. I showed in the Xauusd analysis that I posted today my most recent flip will be this one. But as you can see, I'm using very dramatic lot sizes, and I'm really not closing a lot of profit. So the idea will be, I'm here, this logic works, but the issue is that I'm not assigning correctly the margin. So this logic should have way less multiplier and initial lot size than the one that is currently having, because as you can see, it's pretty much scalping 100 points. So at the end, this is not worth to open big lots if I'm pushing so small profits. This is better when we open multiple small lot sizes, even 0.05 or lower, and just scalp the range, because sometimes price will stay there for hours or even days. So if I have a good position in that range and I have this logic active, I can be closing, because as you can see, we also have negative trades. Of course, the third layer covers the past two layers. We have more layers, just we cannot see it here in this picture, but at least this layer is covering two layers, and this is only profit. So it's also taking out risk. These negative orders are at worse prices. As you can see, price went down, but they placed a trade here in 46.12, and my last was at 44.41. So I'm taking out risk because my first order now will be open at this price at 28.44. So in case price keeps dropping, I'm already out of 2 pips, so 200 points of risk, or $2. That is a lot. In trading, it's a lot. So the idea will be that to try to reduce the amount of martingales my EA is opening, because I don't trade with one logic, so I don't trigger one martingale. I could trigger 21 martingales if I wanted, but that's not the point or the idea. And also this will open the doors to new testings for prop firms. Of course, that model that I just showed, it's at 200% flip, but it's not suitable for prop firms. You will never be able to get those results in prop firms, and especially you won't get them with Ftmo. We know that at least algo traders that like to backtest, we know that Ftmo buffers the margin 333%. So they're reducing your margin more than the original leverage that you already had. So if I test here in this FOREX demo the leverage that Ftmo is allegedly giving me, I will open, let's say, 100 lots. And if I do the same testing in the terminal of Ftmo, I will be able to open 10 lots. That's what the buffer is doing. It's getting you a margin call faster, because of course, if you are draining your margin, you will get a margin call when it's lower than 100%. That means they will close your positions and you will lose. That's the oldest trick in the prop firm industry. Nobody knows. So that also means that your profit potential is being decreased, because you only not have the 1 to 30 margin. You have lower, and you have a daily drawdown. So the amount of lots you can open versus the profit expectation and the daily drawdown, that it's 5% versus the 10% profit, well, they are doing it very hard. I'm not saying it's impossible or anything. Let me show you the here. Last year around this time I was testing, as you can see, 20 February, 4 of March, with my B2 version. This is the B2, actually the one that is free in the server. And as you can see, well, it's doing the task. So in 9 days, we're at 61% consistency, 1.45% max drawdown, daily, with the max add lower because of the daily profits adding, of course, with the profit target slightly above the target, but we don't care. They don't pay well, this is the trial. It's not a real one, but in the real one they don't pay extra. So as soon as you can close the 5%, just get out. And well, there was no need of placing extra trades because we did it in 9 days. So this was the last test. As you can see, a lot of scalpings. We have average profits of $10. We opened 70 lots. At the end, at the beginning we started opening. I remember that these 2 days I had a different set file. So by the end of the testing, I was already running different inputs. At the end, it's what changes: the inputs, the multipliers, the grid, or how many logics I'm using. I need to adapt based in the market conditions. This is another test. You can see another pass. I did 3 escalated. I passed one, I did another. Passed one and did another. So this is not showing pass, but it was also passed. This is an average profit of half, but also it's using very big lot sizes. So let me show you the first one. Check. I think it's this one. Yeah, this one. So as you can see, I'm here using more conservative lots. My average profit is a little bit higher, but also my profit factor is getting reduced. So this means not that I'm opening 31 lots in one trade, means that that specific day I open in total 31 lots. So it's very good because it can get you faster prop firm model in any situation if they allowed grid trading. Because of course they won't do grid trading because they don't want you to make money. Just as like they add the buffer, they will also ban profitable strategies. Like here in the B2 and B3 results, like this is what I do with grid: no stop loss, counter trending the market, and using hedge. Like I try not to use martingales, but I do use multipliers. That is not the same. I consider grid way more efficient and better risk management than using fixed and linear stop loss and TPs. Like my strategy is say whatever you want. It works since 2021 with consistent and proofs, with consistent results and proofs. Not only these ones, of course, here in the section you will find a lot. My P1 portfolio, that is my longest tracking record. 113 weeks, 147% return. Like say whatever you want, this works. So you either like it or not, but you cannot deny the facts. So you can either play the rules of the prop firms and open one trade with stop loss and TP and wait forever to make some money, or you can just boost the power of algorithms and make real money like real traders. Like manual trading is so antiquated. Like you should learn the fundamentals and the technicals of manual trading, but you should not be executing yourself. Like a simple piece of code can do what you're doing with a click in the mouse way better than you're doing it. So it's not flexing or flaming anyone, it's just the reality. Like algos can trade 24/7 without excuses or psychological patterns. So we can be here 1 hour explaining why algo trading is superior to manual trading, but that's not the point. So just to end the fixed rant, I will be tracking I will be opening 8 accounts, 4 of 100k and 4 of 10k, and I'm gonna be tracking the drawdown so I can check which models are the best or most viable for Ftmo, at least for the daily 5%, which ones have the best possibilities at the end to do the, because I can do the 1 to 2 very easily. Like I can get the 10% very easily, and I can do lower than 5%, but also depends on the market conditions, because again, I'm a counter trend trader, so I just need to be sure when to enter the market. And since my EA has no built-in risk management, I pretty much do everything for my EA. If I flip my account, I flipped it, not my EA. So the idea is to manage as less as possible, but also to keep it active. Don't waste any move or any pips markets will drop. Currently, the situation with gold is very sweet because it's getting pressure to the downside. So it's the safest role that you can do is just go with buying or a buy model. So this is a buy and sell model, but I will adjust it to be buy or sell, or it can be buy or sell. So the possibilities are very big. It's just about testing, back testing, forward testing, executing, and stop listening to the FOMO of others. The more they talk, the less they make money. So just do your thing, find your edge, and apply it. There's nothing else that you need to do. So have a good one, G's, and I'll be updating the results next week. Of course, I expect some accounts to get smoked, or tons of accounts, because I have a lot of set files. So like this is just one file of thousands that I have. So reality is I need to check one by one, because this is pretty much about I have of archives. So I just need to go by one, test, check if it's better. For example, here you see clearly the new model is better. That's why I'm showing you this one. So I already moved from this one. This closing is terrible, but here I'm closing. So it's the same range. It's the same thing. I'm just managing my EA in specific ranges. So if this happens again, that will happen again. Everything in markets happens same. We just don't know when, but if it happens again, it will trade very efficiently, like we are watching it trade. But of course, it might be another range where I get this terrible closing, you know. So it's just a matter of testing and knowing your market edge, you know, and where to push to the limits and when not. So have a good one, G's.